Greetings, and welcome back to the podcast. This episode, we are joined by Mr. Mondor, CEO of Aldon Oils and Tribune Capital, a private energy company and family investment office, respectively. Aldon Oils produces approximately 4,000 barrels of oil a day and is one of the largest private energy companies in Saskatchewan. Tribune Capital invests in a broad variety of assets, including technology, real estate, oil and gas, farmland, and debt. Mr. Mondor was also named the 2024 Saskatchewan Oilman of the Year. Among other things, we discuss bootstrapping Aldon Oils to 4,000 barrels of oil a day, the advantages of private investing, and the opportunities in tech, movies, and real estate. Enjoy. This episode is brought to you by Ninepoint Partners and the Ninepoint Energy Fund. Ninepoint Partners manages unique alternative investments that offer investors the benefits of better diversification. With over $8 billion in assets, Ninepoint is among the largest independent asset management firms in Canada. Learn more at ninepoint.com. This podcast is brought to you by EVA Software. EVA is a next-generation analytics platform powered by McDaniel Research and tailored specifically for oil and gas to quickly derive insights that matter to energy operators, investors, and advisors. EVA is the only platform that leverages public data, in-house operator data, and exclusive data sets interpreted by professionals at McDaniel Research. This combination allows rapid analysis of the most complete data possible, enabling better decisions around A&D, completion design, and optimal field development. Visit turinganalytics.net to learn more about leveraging EVA to uncover hidden trends, make informed decisions, and stay ahead of the competition. This episode is brought to you by Galatea Technologies. Galatea is a software company based in Calgary that is focused on helping producers better manage their fluid logistics. Galatea enables field operators and truck drivers with the ability to make the optimal decision on every waste, water, or clean oil load, resulting in 20% savings on trucking and disposal costs. The Galatea platform makes it easy to create digital truck tickets, manifests, and shipping documents that automatically flow through the field data capture and finance systems. Galatea's platform is used by over 50% of Canadian producers, 600 trucking companies, and hundreds of disposal locations. Visit galateatech.com to learn more about how to optimize that last line on your lease op. This podcast episode is sponsored by Enverus. Enverus is the world's largest energy-dedicated software-as-a-service company committed to helping customers close the gap between data and value creation. Enverus has been supporting the Canadian energy industry for over 30 years. Visit Enverus.com for more details. Good morning, Mr. Mondor. Thank you very much for doing this on this rainy Wednesday morning. I appreciate your time.
Yeah, real pleasure to be here. I got a hair wet on the way in. I don't have much more than that to get wet, but
Yep. There's a lot of people out there that will appreciate your insights. You're the CEO of Aldon Oils and Tribune Capital. I thought for the purposes of today's conversation, we could structure it a little bit around Aldon, Tribune, and some of the other investments in movies and tech and whatnot. You were also named the 2024 Saskatchewan Oilman of the Year recently, so things are going well.
that was a great honor, and completely out of the blue. It's funny, we were just talking earlier that I've stepped away from the Saskatchewan Oil Show a while ago and was chairman of that show I agreed to do 2 years, and I ended up doing it for 6, I believe. So it's one of those things where you get into it, and enjoyed my time there. But as soon as you start stepping away from these things, that's when your name goes forward for some of these honors. Incidentally, my father, Pierre Normand Mondor, was Southeastern Saskatchewan Oilman of the Year many, many moons ago. And it was a great honor for him back then too. That was a little different. It was focused on Southeastern Saskatchewan. My involvement is a little bit border to border and outside of those borders as well into Alberta. And I understand, which is a big honor, that my nomination came from outside of the oil business. And so it started there, and I think there was some others. I don't really know who or what or why or how, but I do appreciate it. When you look back on who has won that award, I don't know if I belong in that. It's a big honor. I'm currently working on my speech. I am not a funny person. I live a humorous life, but I'm not a funny person. And I know you're supposed to entertain and be this funny, dynamic person while you're doing these acceptance speeches, but I don't know if that's going to happen. So a little nervous about it. Let's put it that way.
Well, maybe for the listener, we can start at the top with Aldon Oils. Like I mentioned, you're the CEO of Aldon, but what is Aldon?
Aldon is a private company, and you'll never hear me in an interview without bringing my father into it, because he built the stadium. He built Aldon Oils. It was purchased from a couple named Alan and Donna in 1974. And so the Mondor era of Aldon Oils is 50 years old this year. It's been an exercise of a long road. It's been fun. But with my dad starting in 1974, I was 6 years old at the time, so I didn't have a whole bunch to do with the startup. But I'm sure he was thinking of us 5 kids when he was starting it. It's maintained private the entire time. I ended up buying Aldon from my 3 sisters, my brother, and my mom and dad in 2011. The deal closed in 2012. So it was a difficult situation. The valuations were high. So we'd done some good things, my brother and I and my dad, and we've done some good things, built Aldon up to a pretty good sized private company. The tensions were high, but at that time, Dad was 75 years old. He's 87 now. He's still in great shape, but it was time, I guess, for him to step back. 2011, myself, I took on an exorbitant amount of debt. There was nothing given. It was purchased. Exorbitant amount of debt, nine figures. And, at that time, I felt like I was staring down the flames of hell with a squirt gun in my hand. It was just really a daunting sort of a task to me. I knew the asset. I knew what I wanted to do. In the oil business, there's all sorts of elements that you've got no control over. And of course, the number one thing is oil price. And so where am I going to go? What am I going to able to achieve? How am I going to get this paid off? It ended up being a balance of drilling, buying, building, and debt repayment. And I think you can fill this room with oil guys. They know exactly what I'm talking about. There's that balance of how do I do this? Because you need the cash flow in order to pay the debt. And how do you get the cash flow, or how do you maintain the cash flow? And that's to drill, to keep drilling, to keep building, and all those good things. So it took us a few years. It took us August of 2018 to pay all of the debt down, to get it to zero. I can tell you this, I will never go into debt ever again. I literally wore out the edge of every seat that I had, because I never sat back in my chair during those years at all, because it was high stress, but it was also high performance years. We do well under stress. We got a great team at Aldon. That team that was with me during those early days of purchasing the company, they're all still with me. They make up the core team. We call it the dream team. The technical people that really help me. Together, we decide where the ship is going, who we're buying, where we're drilling, all those good things. It's a constant moving target. Things change. Somebody drills right next to you on a previously worthless piece of land. Somebody drills next to you. You've got something there. You've got something to go for, to drill. You get a lot of surprises in this business too. I mean, so when you talk about the risk of oil price, you also have technical risk. And so drilling dry wells. We were fortunate at Aldon. When my brother and I came back in 1996, I was working for Amoco, and he was with Norwest Shooters in Medicine Hat. And my brother's a very technical guy. He runs a field like a champ. I'm more on the drilling, the business side, and which made quite a partnership that still exists in many companies today. But the technical risks of this business, you have some dry wells. And like I was getting to, when we started our drilling program in 1997, when we really became what I would call a regular driller, we started out 20-0. So 20 mediocre to good wells in a row, no dry ones, no misses, no X's. That got us on a trajectory that really got us to where we needed to go. We could handle a dry well or two after that. And 21 was a dry well. And then we went on another great run. Aldon Oils has really focused on the conventional, keeping it simple. So what we like to say is we drill from what we know to what we don't know. We're not explorationists. We really concentrate on the Midale and the Frobisher. More recently, in more recent years, we've been really hitting the Frobisher, getting those big numbers to begin with, and then they disappear. Whereas the Midale, we've got wells still producing from the 50s in the Midale zone. It's also very receptive to water flooding. And so it just keeps that life of those wells just going and going, and they just keep giving. My father always told me, and he didn't come up with this, but Dad always told me that there's more millionaires from Midale Frobisher than ever were created from the Red River, the Bakken, the Torquay. And not to take anything away from those zones, but that Midale, that predictable, it becomes a milking project. That's kind of where we are with Aldon, is trying to keep it simple. The Frobisher's a little more trickier. It relies, our technical team does do a little bit more head scratching and trying to figure out, push those plays, develop new ones, look for bypass pay, all those good things. And I guess that's where we're at. We do, and I used to never talk about Aldon's production because I own 100% of Aldon, and all you need is a calculator to kind of figure out what my income is, and that's not polite. But there's new software out now, and your phone can tell you what Aldon Oils produces. So we poke our head above 4,000 barrels a day. We drop down below 4,000 barrels a day. We poke our head above. We poke her way down. But we don't really target a number. We don't have any shareholders looking at us. We don't have any, the Securities Commission making sure that we're reporting this right or reporting that right or whatever. We're just trying to do the best we can in the oil business. Further to that, when the oil price is good, guess what? We drill all the time. When the oil price is bad, well, we work on different things. Maybe we try to buy somebody, or maybe we maybe try to go to the land sale for some better deals. But it's interesting. Aldon Oils has, in its 50 years of history, has never hedged a barrel of oil. So I'm not smart enough to figure out whether oil's going up or down. And with the years now, and it's been years of backwardation, if you're going to tie up your oil, you are going to take a hit in the near term. I don't want to take a hit. If I'm getting today $79 a barrel, I do not want to hedge my crude for $75 because I'm getting 79 for it, or 74, or whatever the number is. And so, we've talked about it. We've walked down that road a little bit with some of our brokers, but we haven't done it. We don't need to do it. If you recall about the debt thing, I'll never go into debt again. And I'm serious about that. And so if we're not in debt, we don't need it. Why do it? Because like I said, I'm just not smart enough to figure out whether oil's going up or down or what it's doing. But yeah, so I don't know. I think I've summed up Aldon Oils. I do have a wonderful daughter who's working in the oil industry in Calgary right now for one of the super majors. And she is, every dad's dream is to work with their kids. So I'm hoping, and she's interested. So I'm hoping that Aldon's 50 will turn into a lot more.
When your dad purchased Aldon, what was the production at? And did he sense a big opportunity that was in front of him?
For those of you that are listening that know my dad, I'm going to say he's the smartest grade 7 or 8 educated person you'll ever meet. Because for one thing, for the first 3 years of his schooling, he only spoke French in an English school. So probably didn't get a whole bunch out of that. But Dad bought Aldon it was zero production. It was one well. It was shut in. He was working on a service rig. He had some ideas. He's got an inquisitive mind. He's working with the guy on site that had a little bit more knowledge than him and all this sort of thing. And so he ended up buying Aldon for not much more than what was in his wallet. So really, I mean, there wasn't much there to begin with. I'm not sure why he kept the name. I probably just didn't want to change the sign at the end of the road. I'm not sure. But he's a wrench turning guy. He can take a shut-in well and make it a 5-barrel a day with 1 barrel of water, sort of a guy that's that Midale production, right? And so what he did is during those early years is he took a bunch of either shut in or 3-barrel a day oil wells and with the magic of his toolbox, made a bunch of 5-barrel a day wells. So, I mean, let's do the math. I mean, if you do that 20 times, you got 100 barrels a day. And this was a sideline for him. This was off the side of his desk. He ended up being the general manager and running a fairly good sized service company back in the day. And they knew about it. It was just part of the deal. You know, he's going to work here. Well, he's also going to run Aldon on the side, sort of thing. So that was going on. After I graduated in 92, I graduated from the University of Saskatchewan, and I graduated and I got the job out of university. I went to work for Amoco Canada. Can't say enough about Amoco. It was a great stay there. But I remember looking, it was about in 95, Scepter started drilling horizontal wells down in southeastern Saskatchewan. And here's my dad with all of these old vertical wells that he turned from 0 or 3 to 5 or 7 or whatever. And I phoned up my brother and I said, hey, Kermit, we've got to get to Weyburn. Dad is sitting on this. And Dad was just busy minding his own business and producing 60 barrels a day, 100 barrels a day. It was something like that. And so Kerwin ended up moving back. And then I moved back in January of 96. He'd moved back maybe 3 months before I did. And so together we put our arms together and built that thing. 96 to 99 was tough. Those were tough days. 99 to 2015 was one of the greatest bull runs it's the bull run of my life. And that run, and that, incidentally, that, if you recall, the 2011 is when I bought Aldon. So I got the last third of that bull run. And thank goodness I did, because I was able to pay off the company and build and do good things that way. But 99 to 2015, awesome bull run. Big numbers. We hit some great wells. We started drilling as a steady driller in 1997, given the oil price not quite as steady as one would think, but 5-6 wells a year. And then when 99 hit, that's when we started to get into the bigger numbers, more or less becoming a steady driller at that point. 2008, we actually added a second rig. Mistake. My team wasn't set up for 2 rigs. It overwhelmed everybody. And as soon as we realized that, we dropped that second rig, but we drilled about 50 wells in 2008. It was some busy times for us. And of course the production jumped on us as well. So, Dad's a real cash guy. He's, he always tells the story about, when he first started out with Aldon, he had a couple wells, 2, 3, 5 wells. I don't know what it was, and so he had a lady that knew a little bit about production accounting. So she helped him out, and he phoned Regina, and they helped him out. They were good. Dad's the kind of guy that you want to help, sort of thing. And at the end of the month, he had all this money left over, and he phoned this lady that knew a little bit about accounting and production accounting. He goes, "There's this money left over. What do I do with it?" She goes, "Put it in your pocket." And, it has been a little bit of a joke sort of thing, but yet not. We call it the Pierre Mondor School of Business. Do I have more money in my bank account this month than I did last? Sounds good. It's not that quite simple, but it's a humorous look at it, sort of thing.
Did you view Aldon as a kind of growth vehicle to expand production and reinvest cash flows, or was it harvest mode, or was it a bit of both? Did you view it as a platform to start to invest in other things at the time?
So Aldon, as a family company from 1974 to 2011, it was all about growth. My dad has a one-track mind, and that's oil and gas. So the great things that we did together. He reinvested 100% of the money back into the ground, back into building, back into buying. We bought just a wonderful asset in 1981 from Gulf Canada, which today is doing great stuff for us even today. But he basically took everything he had and put it right back. The exact type of businessman that the oil business in Saskatchewan love, because he took everything he made and put it right back in there to grow it. Paid a bunch of salaries, paid a bunch of royalties, all of those good things. So that was a real growth play. When I took over in 2011, and again, we'll go back to this debt thing, I had to change my thoughts because we never had debt before that with Dad ownership and Kerwin and I working at it. But after that, we had this mountain in front of us, this it was on our shoulders. And so it was a real balance between having to say yes and no. Yes, we can do this now. No, we can't do this now. And so it became more of I would say a difficult thing to run. 2011 to 2014 into 2014 was just a wonderful run. I was fortunate and I made a lot of errors on my judgment into the future, and I made some good things into the future. But I recognized in about September of 2014 that something wasn't right. It didn't smell right. There was some squabbling going on with OPEC. There was, there was a real big push down south. And it just didn't feel right. And I felt this coming, and we gave the rig away in September. It allowed me to conserve that cash from September to, it was just starting to really drop in the early parts of 2015. But I had stopped and was able to use that capital to pay down debt and survive is what we did. But you say survival. Let me jump ahead to 2016, 2017, 2018 again was a great year. But 2015, 16, 17, those were tough. Those were tough for a single owner, a guy with debt. We had done some good things before that, so we had some carryover from that. But 2015, 16, 17, a lot of my friends downtown Calgary, and I was coming to Calgary on a very regular basis at the time, and differentials were killing them. People just hanging on. And in southeastern Saskatchewan, it's really been differential heaven there. And so, being a low-cost producer and really being an area where the differentials were really good. In 2016, although that's the first year that we ever, on paper, lost money at Aldon Oils, we didn't have that same toes over the edge sort of thing, we didn't have that same pressure. We were going to make it. Those management meetings weren't a lot of fun. Let's put it that way, but they weren't. Then we had that little head fake in 2018. And 2018, we discovered the field that we're still currently drilling right now in Lapman. And we started drilling it. Our geologists identified kind of a different way to go about it. And we started the multilats and have really developed that further in 2022. Where we really went after the multilats, and it's really skyrocketed that asset. We bought that asset in 1981 from Gulf Canada, and it was, I believe, 8 barrels a day, and that same facility today is doing 2,000 barrels a day, the one facility. And so we've been drilling, we keep it going. We've mitigated a lot of the traditional declines, the wild declines that you see in the Frobisher by those multilats. So drilling 3 different signatures in the Frobisher. This isn't Colonel Sanders' recipe. I mean, people can look and see what we're doing. So I'm not giving away anything here, but that's really mitigated. We'll go away. We won't drill that asset for 4 months, and the production is not a whole bunch different. But that was 2018. We discovered that asset. 2018 turned into a bit of a head fake. 19, and then of course 20. 20 was, and again, I talk about my ability to look into the future and not look and be wrong sometimes and be right other times. When COVID hit, every single one of my predictions as to what was going to happen with anything was wrong. I didn't get anything right. I didn't think that they would sell another resort property ever again with COVID. I didn't think they'd sell another $400,000 boat. Well, guess what? All the resort properties were sold. You couldn't find a $400,000 boat because they were all on the water, right? So those are the kind of predictions. And I take that into the oil business. Mondor rule number 7, and my people that work with me know what that means. Mondor rule number 7 is that if you don't know, don't do anything. So if you don't know, don't do anything. You're not sure, don't do anything. And that's kind of what we did. 2021 started getting a little bit better. We started feeling and we started looking at some of these things that happened. 22 was the best year in the history of Aldon Oils. Well, not only did we have $100 oil, but there's another element at play here, a 73-cent dollar. We believe at our currency guys at Tribune Capital, as well as myself, we firmly believe that we're going to be in the 60s on the Canadian dollar, just the way inflation's going. And of course, we're comparing it to American. So when you couple the $100 oil, I forget what the average was when 2022, but we had very nice production as well. We were hitting those multilats and doing some good things. But it was the oil price, but it was also that Canadian dollar. And what a wonderful scenario when you can be paid in American dollars and pay your bills in Canadian. I mean, it's a perfect storm. Right. And so 2022 by far was, the ball was going out of the park and it was still going up. It was a wonderful year. 2023, again, a great year with a little bit of a backing off of the oil price, but the Canadian dollar still, giving us 37% more than what we should be getting. I was listening to Paul Colburn on here a little while ago, and it was a quote that he had. He said, let's face it here. We're all smart people and all that good stuff. But he said the oil price, and I would add to that the Canadian dollar. I can't remember if he mentioned the Canadian dollar, but those are the tailwinds, right? So, I mean, before we start lifting each other up on our shoulders and everything and patting each other on the back, we've got to look at those sorts of things. And those have been certainly carrying us.
Just a quick thank you to one of our sponsors, and we'll be right back to the show. This podcast episode is sponsored by Connate Water Solutions. Do you need cost-effective water sourcing options to supply your next drilling or completions program? Connate Water Solutions is a specialized hydrogeology company focused on water well drilling, testing, and water management services in Western Canada and Texas. Contact info@connatewater.com or check out connatewater.com for more details. Along the way, how did you think about offers to sell the company? On the flip side, did you ever consider going public?
So we've had a lot of offers to buy. And I got to admit, in some of my lower times, my 2015, 16, 17, it became something that I thought about, but never something serious. I never took an offer. I've had many phone calls about it. We considered it. I think about what I want to do. I mean, with all the other stuff that I have going on, I mean, I'm an oil guy, and this oil business is what, if I did have hair, it would be what blew my hair back. I mean, it's just what I get up for every day. It's so much fun. I got a great team in Aldon. We have a lot of employees all pulling the same way. It's just such a great scenario. So no, I didn't really seriously look at selling. And in fact, during those contemplations, we bought more land. We bought more this. We bought more of that. We built this. We made this better. So no, seriously. And going public, to me, I look at some of the great oil companies that are public. They're not getting their multiples. They're not getting what they deserve. Whitecap, Surge, as well as they do, and they're performing well and all that sort of stuff. They're still not getting the love. In Canada, I don't think I just don't know how that's going to come back. I've got a face for radio, not for standing up in front of a bunch of people and et cetera, et cetera. I'm great on podcasts.
Yep.
But, I don't want to be in front of a bunch of people trying to defend how we're running the business. I don't have a board. I've got some smart people that I've circled myself with. That's awesome. But I wouldn't do well with somebody telling me that I'm running the business wrong. or that my people are running the business wrong. It wouldn't be a consideration. Would I sell eventually to somebody in the public markets? Well, for one thing, I'm not selling, but if I ever was, I might do that just to. I've had some friends sell to some public companies, and they've done very well. The timing was good, and all those good things. But no, it's never been a real consideration. Love what I do. I get out of bed just with the biggest smile on my face. For one thing, to get out of bed, I turned 56 2 days ago, and I just feel like I've got a 30-year plan still in front of me of running an oil company and making it bigger and better and all those good things.
Aldon's been pretty active in the Frobisher lately. Mm-hmm. So I guess the question is why the Frobisher? Without giving away your secrets?
The Midale zone, which we've got, I'm going to say we've got 250 Midale wells just chugging away day in, day out, just giving what they give. You pump those wells off. We bought a nice asset from Enverus several years ago, one of the purchases after I bought Aldon, and the Midale zone. And I think Enverus had kind of moved about 40% of the waterflood that had been designed for the areas. And so what we did is we got the property and then we completed the other 60%. And that production, and it's been 10 years, is, I believe, maybe 10% higher than it was 10 years ago. And we haven't done anything. We haven't drilled a well. We haven't done anything. It's rock solid. So you can bring that to the bank. You can walk directly to the bank with that check and cash it every month in, month out. Frobisher, different story. So traditional Frobisher has been turn and burn. Drill them, you get lucky. Our best Frobisher well was 800 barrels a day. Paid out in 19 days, I think, and all that. Unfortunately, we haven't done that very often. So, and we also have changed the way we do our Frobishers. We bring them on very slowly. We could bring them on a lot harder, but we don't. We're trying to experiment with that zone a little bit more and get more of that Midale-ish sort of complexion to it. But the Frobisher, there's no denying it. The Frobisher is going to give you those big early numbers. We like to get our wells paid off in 6 months, in 4 months. 19 days would be great, but those don't happen. But you get them paid off quickly, and then you manage it. You manage the asset and try to get as much as you can out of the zone. We do drill our Frobishers a little bit more frequent, so a little tighter together. We're not selling, so we're not trying to drill one well, one side of the section, and on the other side of the section. What we do is, I think my nephew calls it carpet bombing. We'll drill and just keep getting great results from these multi-lats. And again, mitigating some of these declines that I was talking about, where it's kind of a turn and burn. And we've done that. And I think that's kind of our secret sauce in the fact that we're drilling these multi-lats in different zones within the Frobisher in the same well, and the declines are much less than they are. So we've got a couple of main core areas for our Frobisher, great results. The odd time we'll have stub our toe just a little bit, and then we'll get a different idea or move in a slightly different direction. We've got a great land base, big land base. So those two areas, we're trying to develop it outside of those two areas. Love to get 4, 5, 6 areas going where we could kind of rotate and drill and wait for results, drill and wait for results. So the Frobisher is for your wallet. It's, we can drill them for not much more than $1 million all in, tied into the facility, make your money back. At the end of it, hopefully you still got some pretty good production.
If I'm correct, did you do business in school?
Yeah, I did. Well, first of all, I did engineering. So after my second year of engineering, I was skiing on the bell curve always. So they never kicked me out, but I seen an opportunity to get out and do my business degree. And I did that. My plan was to then return. I loved school. I could have been in school for a long time. Even after I got to Calgary, I took 4 years of night school, did some petroleum tech at SAIT and all that good stuff. But my plan was to go, after my business degree, was to go back and finish off my engineering degree. And I was not a great engineering student, and I didn't realize that many were in the same boat as me. You know, you go from 95s in high school to 68 in university. Well, guess what? Everybody else was at that too, except for the geniuses, right? But then I got that job with Amoco coming out of school, which I didn't know. I don't know if Amoco didn't get the memo about what they were paying people then, but my job paid 50% higher than anybody else coming out of business school. And so I went, well, okay, I'm going to take this job and I'm going to go to U of C and take some engineering classes, and I'll see if I can do it that way. Well, I never went back. I did do some petroleum tech at SAIT. But it's funny when you say that. I've never really worked as an accountant. And if you describe my days at Aldon and my working career, it's been more on the engineering side. Of course, not doing anything official, but that's my brain.
Kind of learned it from the bottom up, running the business.
Oh, for sure. School of hard knocks. In fact, and I'll tell this story. There's a really successful oil guy from Carlisle, and he came down to my office in Weyburn at the time, and he was school of hard knocks all day long. And he's it's about my age, actually. And he'd worked his way up through the rigs and had done this and had paid attention and built some pretty good things for us. And he said, well, he said, you know, Del, he says, you and me were the salt of the earth. No education, we just got out there and did it. And I was kind of giggling, and my degree was behind him at the time. And so I just jokingly, I know him pretty well. And I turned around and I said, well, there's a couple of degrees up there, or 1 degree up there, and a designation. I said, I did do that, but that was a huge compliment. Mm-hmm. It was a huge compliment. I was really happy that he said that, because he basically welcomed me to the practical side of the business.
Somewhere along the way, Saskatchewan, through commodities, oil and gas, farming, and all the other businesses located in the province, has developed a pretty strong economy. When do you think that started to emerge? A lot of people maybe don't appreciate just how large the Saskatchewan economy is.
Yeah, we've always had it. Whether you're talking about uranium, potash, oil and gas, wonderful farmland. I mean, that it just produces, just yields like incredible. We've always had it. And so that balance of being able to tap into those natural resources, the one thing that Saskatchewan has done a lot of, probably to not its favor, has been it's produced the raw material, and then it's sent away that raw material to be processed, whether it's a refinery, or although there is a refinery in Regina, but whether it's refining oil, whether it's doing something with all of these great crops that we grow, the potash going to different spots. So the raw materials, and so it's kind of the model of, well, we're growing wheat, let's make the pasta in Saskatchewan too. There's been more of a movement towards that, more of the processing, more of the product being in Saskatchewan. The people aren't there. I think 1.3 million people in Saskatchewan. So, a lot of, it's not that natural to do that. Of course, government policy's got a lot to do with this as well. And, I'm a firm believer of the government is there to set policy, to set the rules, and then get out of the way. And if you do that, and if you've got people with the right mindset that want to build and they want to create wealth, that's going to be the best thing that you can do. Job creation isn't about hiring more government officials. Job creation is about getting out of people's way and going, here it is, guys, here's your rules. Don't violate those rules, whether they're environmental or competitive or whatever the rules are. Stay within those rules, set them, maybe put on your policeman hat so that nobody does that, but then get out of the way. And I think that's what Saskatchewan's done. We've had a good run of premiers, leadership, Premier Mo, Brad Wall. These guys have done exactly that. They've kept it small, and they've more or less stayed out of the way. You stay out of a good Saskatchewanian's way, and they're going to do something. And I think the whole idea of that too is for the Saskatchewan people to get off their wallets and invest. And I know that was a historical problem. The Alberta companies would come in or these people or the Ontario companies would come and do the uranium or the whatever sort of thing. And it's Saskatchewan people like Dean, who was on here last week, Dean Popple. Those are the guys that are investing in Saskatchewan, bringing their other people's money into projects in Saskatchewan and building.
Do you remember when you realized that the economy was flourishing and maybe for some of those reasons? Did you realize that along the way?
I would like to humbly suggest that I've been part of that. Certainly my dad, but part of that getting off your wallet, investing. I mean, Aldon Oils invested a giant number in 2023 in Saskatchewan through the paying of salaries and downhole tools and surface leases and drilling rigs and et cetera, et cetera. I mean, it's right around that 9-figure in 1 year. So that was always in my brain, the spirit of building and going and doing. Nobody shot off a gun saying, okay, start now.
Yeah,
it was just
kind of happened.
It just kind of happened, right?
One of the other things you're involved in is Tribune Capital.
Yeah.
What is Tribune Capital?
Historically, we, especially my brother and I, we started things off the side of our desk. And we're oil guys. We're producers. We started to vertically integrate. We sat down with a good friend who's a great service rig guy. And together, the three of us, we started a company 25 years ago that's been hugely successful and still in business and great market share and all those good things. A great investment. And then we started a preset drilling company called Connate Drilling in Wainwright, operates a lot in Kindersley, and wonderful stuff. My nephew's part of the management team and a real smart guy that we've been partnered with for 25 years there as well. Morley Muldoon Trucking, we turned into Riker Trucking. So those early days was all about vertically integrating. We started a company called Double J Construction because guess what? At Aldon, we had 400 wells that needed maintenance and needed stroke changes and new batteries and setting jacks. And so we built our own. So that was the kind of the beginnings of it. And the model was get that one guy that really knows his stuff, bring in my brother and I to provide a 400 well oil company and money, of course. So that carried on for the years, very successful. By the way, all of those companies are still in existence today and big market share and doing great things. There was a reason for it. There's a reason why we didn't go into other things. We've never had a real need to go into drilling rigs or some of these other things. And it's just kind of the ideas that we had on vertically integrating. But that's the precursor to this. And so in 2016, with a little bit of time on my hands because we weren't drilling and we weren't doing what we were doing, I really wanted to develop this Tribune Capital. And incidentally, and I've said it a million times, I love my mother. She was born in Tribune, Saskatchewan, and that's why it's called Tribune Capital. So we decided to formalize. And one of the big things for me was I felt like I was always chasing in the stock market. Even though we're knowledgeable in these areas or those, I was always chasing. And it just felt like, the JP Morgans of the world were setting the rules of the game and they didn't tell us about it. So I wanted to disconnect from the stock market, the public markets. And we have done that. So 2016, I hired a guy named Michael McLean. And he was doing research for a company in Calgary here. And I hired him and he really came in and learned the business. But then we decided to really formalize Tribune Capital. That has been a real exercise in our money works for us. Not only are we working hard, but our money works hard. We place it, we invest in good, solid companies that aren't necessarily public. You can't have a big portfolio without having a public element to it. And we do. I mean, it's part of the pie chart, right? So we started Tribune Capital, and that was always run out of Weyburn, Saskatchewan. And then in 2022, we moved everybody to Calgary. And it's really taken on fairly well known in Calgary. We've kind of hit the ground running here. Several years ago, we invested in a company called Showpass. We put a big number with them and we really believe in those guys. I mean, just a solid group. Tyler and Lucas, excellent guys, joined the board there. we invested in a company called Trevor. Again, they're just on the cusp. And we actually share office space with them. But some of these are really high valued show passes at record numbers. I mean, it's doing great things. Trevor is doing great things. Just really pumped about these. And if you go onto my website, tribunecapital.ca, we actually put our investments on there just to kind of see, to show what we don't put the amount that we invested, but we like to take meaningful positions in companies so that we're not wasting our time. We're not going to put $50,000 in and then put an analyst on it, right? We're going to make a big number, put a big number on it and make it worth our time. When we win, we win. We've had some zeros, probably going to have more zeros. I mean, it's just part of the game, but we're going to have some multiples as well. So it's been fun. I mentioned Showpass and Trevor, but I mean, Origin Film Funds has been, for one thing.
So what is Origin Films?
Origin Film Funds is a friend, Blair Ward and myself and Art Robinson. Those guys really came up with the concept of financing films. Yeah. And out of little Calgary, Alberta, we are something in the movie biz. Blair's all over the world. He just got back last night from Cannes, and we had two of our films in the Cannes Film Festival, both standing ovations at the end of them. So those guys developed a concept of financing films that is very unique. We love it. I thought it was going to be something that, it's going to be nice to have, a little bit of fun, all that good stuff. Well, it's been financially 3 times better, 4 times better than I ever thought it was going to be. Now, that idea was created out of a failure. And so the 3 of us, including a lot of other guys in Calgary here, invested in a film. And we invested in the equity of the film. We all lost everything. For those 2 guys, Blair especially, kind of realized what not to do, sort of thing. And so we're strictly finance. There's some other things that we do on the back end, but we're strictly finance. We're the ones getting paid first. We're getting our mezzanine type financing out of it. And then we get a little piece of the action on the back end. It did help. Remember I was talking about Aldon Oils being 20-0 right out the gate. Our first movie was a movie called Meet Cute with Kaylee Kuko and Pete Davidson. And it just happened to be a time when Pete Davidson was dating Kardashian or something. I'm not a movie guy, and I'm not a star follower. I follow money. And so this movie, we built it for X, and it sold for many multiples. And we started running. 3 of us are on the board, and we've got a very strict sort of a protocol on how to invest in these films. We don't know what's going to make a good film or not. I think Blair's got a better idea than any of us on what makes a good film or not. But I don't know. I mean, I didn't like Meet Cute. My significant other, Marseille, loved it. So we protect ourselves against that. We don't know if it's going to be good or not. So we're going to be on the finance side. We're going to be the first ones out, and we always get paid. Always get paid. And so that's the key to it. You know, I've mentioned 3, there's 37 more or 47 more. I don't know what there is as far as our companies. There's a few that are struggling. There's a few that probably are going to be very, very nice businesses, but I don't know if they're going to bring us the multiples that we're looking for, that we want to play with in Tribune. But I would like to talk about one significant change that happened in Tribune about 15, 16 months ago. And Tribune Capital is 100% my cash, my money. So I've got these smart guys. We've got Michael and Nelson sitting back, really filling in that pie chart, all the different kind of areas of finance that you should have your money in. What we did about 15 months ago was we started a company called HP Capital. And why this is so significant for us is it's the first time. And so we partnered with Sarah Hocko and Kent Peters, 2 people that have been in the private credit business for a long time, got a whole bunch of experience under their belts, and we partnered with them. And together we built this HP Capital. And it's the first time that Tribune Capital has really accepted outside money. And so it's significant. Tribune is running the back end of the fund. We're doing a lot of the fundraising. Kent and Sarah are getting the deals. We come together, an investment committee, and whether we're going to fund this project or that project. And it's a private credit fund that has really turned into a real estate sort of a deal. So I think our portfolio is returning about 16.1% on mortgage level lending. I think investors were paid back about first year of the fund, about 12%. It's been, again, a surprise. We thought we were going to do 5 to 7 million of business in the first year. We weren't really sure how robust it was going to be. We did 35 million in our first year. So that, again, that was just what? But that was it was a change for Tribune, accepting that first dollar of outside money. It changes your thought process, right? Because it's not just about my money. It's about other people's money. And I take that seriously.
What kind of returns does Tribune look for? Is it kind of the private equity double-digit returns? And then when you're accepting money, what kind of compensation structure do you have? Is it the traditional 2 and 20, or how do you think about that?
The only way that we accept money is through our fund. Mm-hmm. It's through the HP Capital private credit fund. And that's got lower fees. We're new. So we don't have the history and et cetera, et cetera. Although Kent and Sarah have got decades of experience, we're new. So our management fee is very low. We have a high hurdle rate. So everything up to 10% goes to the investor. After 10%, we split it 50-50. And full disclosure, I'm the biggest shareholder. So we have a lean towards the LP because I'm the biggest shareholder. So, I mean, so we wanted to make that as friendly as possible, of a low fee, a high hurdle rate. So for Tribune Capital, as an investor, I'm doing very well in that, as well as being part of the GP, the owner of the fund. But we're looking for, and that's a loaded question as well, because we talk about that at Tribune Capital all the time. What number are we looking for? What return? Where are we gonna? Yeah, what are we happy about? And it makes a difference because we're getting 5% in the bank right now. A year and a half ago, we were getting 1%. So that does move that needle. And so if I can just sit there and go, well, okay, our target's 5%. The guys are going, whoa, great. We'll just put her in the bank and go on holiday sort of thing. So yes, double digits. We're having dinner tonight with a very good partner of ours, a private equity company out of New York. They come to Calgary to have dinner with us, and some other people from Toronto that we do some business with. We are looking for those bigger wins, disconnected from the market, but we also connect to the market as well. So definitely for Tribune, we're looking for double digits for sure. There's no question about that. We're getting them. Just when I look at the portfolio and the way these guys have got things rolling, it's going to continue. I think even after we get back down to that 1% in the bank, it's a lot of work, not so much for me. I don't have a lot to do with it. I get once every 2 weeks, we have our catch up with what's going on. Where are we going? Hey, Del, we're thinking about putting this much into this fund or that place, or we've got this deal. I mean, we've got so many different things going on. And if you recall, I'm an oil guy, and that's what I want to do. I want that money to work and all that good stuff. And I was just thinking this when you asked me to do the podcast. I was thinking, it's funny where we've been, what we're going to, and timing's everything. We're a very large farmland owner in Saskatchewan. I love farmland. I listened to that old guy, whoever that old guy was, that said, buy land, they're not making any more of it. And about 25 years ago, we started buying land. And at the time, $25,000, $35,000 a quarter. I mean, it's those early days, those first 30 quarters. It's been wonderful. It's been the best investment ever, because those $25,000 quarters, I wouldn't sell them for $600,000 right now. Those ones, the one I'm thinking of has 17 oil wells on it. So I definitely wouldn't sell it for that. But as we go through the years, we have kept buying farmland. And we've bought it at 25, at 35, at 80, at 110. I remember getting criticized at 80 when I bought a big parcel in Stoughton, Saskatchewan, and kind of some of the area farmers there going, come on, what are you doing? What are you doing with your oil money here? Like, you're blowing the value out of the water. So at 80,000 a quarter, it's gone up seriously since then. We're closing a deal at the end of this month for another 35 quarters of farmland, or potentially closing that deal at the end of the month. You just keep buying it. Timing's everything. I don't know where it's going. Maybe it'll drop down again. I don't know, but that's, those are the investments that you make. We've had some fun with it. We've done well with that. I mean, you just can't beat that, and you can touch it. You know where it is. Nobody's moving that farmland on me.
Calgary real estate prices have risen on one hand. On the other hand, there's been record population growth. Do you still see opportunity in Calgary real estate? Are you looking there for investments?
We do see a lot of, especially in Calgary. The better move would have been 2 years ago or 3 years ago, but the good move is still right now, as far as I'm concerned. Talking about multifamily now. I'm not talking about you moving from this one house to that house. I'm talking about multifamily, and multifamily feels good. It's come up a whole bunch. I used to, back way when I had 273 doors in multifamily. And I had a big win, and I took it. We had 273 doors, a couple of city blocks of apartments in Saskatchewan. And we sold them. I think we sold them to Avenue Living way back in the day. Did very, very well. And for overall, it's been a good trajectory, even to this day. Yeah, sure, some ups and downs and all that sort of stuff, but no, it feels good. It feels good. I don't know if I'd be first in line to buy an office building downtown Calgary, but that doesn't feel horrible either. We like Calgary. We like what's going on. We like, this overall underinvestment into the oil business has been great for the price, and it feels like a place to invest, and where better to invest. I mean, when you're investing in Calgary real estate, you're kind of investing in the oil business, right? And so we're feeling very good about it, and we like it. Yeah.
If somebody from New York came to you with $10 million and asked, where do I put it in the energy industry? Would you say public markets? Would you say I prefer private oil companies like myself? Maybe a bit of both? Would you start from scratch? What would you suggest to somebody looking for opportunity in the energy industry?
The first thing I would suggest, find a team, because your team is everything. So you can bring your $10 million in, or whatever, $10 billion, whatever it is. You come in without a plan and a team and all that good stuff. It's just going to evaporate. It's going to go away. You're going to buy the wrong thing. You're going to do whatever. The first thing you do with your money is put that team together. Find a good way, remunerate properly, and then listen to them. Personally, private all day long. I only want to be in the oil business. I don't want to be in the securities business too. So I don't want to worry about my share price. I listen to Paul Colburn talk about, I don't worry about the share price. I just talk about surge and the great things. And it's true, but there's probably something in the back of his head thinking about share price. So I would personally, why do you go public? For fame? You don't go for fame. You go to raise money. Well, you've already just told me you've got a guy coming in with a bunch of money. So build that team, buy the asset, and for me, stay on the producing side. There's some great service companies doing some good things. I happen to own a few of them with my brother and others. But I would stay on the E&P side and let it run, because I feel like we're in for, and maybe not obscene times, but we're in for a good run. Just feels good. OPEC Plus is on side. Everybody's on side. I know there's a whole bunch of geopolitical risk out there. There's these risks, those risks. But when you filter out all the noise, it just feels good. And it feels like something that Tribune Capital's made some big investments. My friend Andy Greenslade over at Astera, we invested in with a very proven team, guys who have done it before. We followed Dean Popple into Point Break, several oily names on our portfolio. We believe in E&P, and we believe in the oil business. That's for sure.
Well, that's over an hour.
What?
Yeah.
Really?
We've covered it all. Movies, show
Sometimes I get rambling.
Hurdles, investing, Tribune, Aldon.
One of the things I'm most excited about, again, it goes back to the oil business, but with Brownstone Resources, it's a very sizable farmland company, but it also has a whole bunch of title. So we've got it's a mineral company. So a mini freehold resources. And that's a real focus of ours. We use those minerals in our core areas. But when they're not in our core areas, we've got Vermilion drilling on our land, Surge, Axial, many companies drilling where we don't view it as a core area. And the beauty of that is there's no liabilities. If somebody phones us up to lease a quarter of land outside of our core area, and we don't think they have the ability to get it done, they're not getting a deal with us. So again, we're looking at that team and going, well, no, Surge, they're going to drill a good well. Whitecap, they're going to drill a good well. These guys, those guys, many of the people that, and so that excites me, that whole royalty biz and title and just letting other smart people do their thing. And we've assembled a huge land base in that company and just keep pecking away. And it's a lot of fun.
Other commodities, you've seen opportunities in helium, potash, lithium.
It's funny you mentioned that. We do play a lot of the different commodities. Uranium's been a real big move for us in the last little bit because we believe in some of the movements that way. Lithium, not so much. I don't necessarily understand how they're going to get lithium out of the brine. There's only so much you can learn. So I wish them the well, and I've got many friends in that industry. Helium, we had one of the presidents of a helium company in town here come into Tribune for a little bit of a lunch and learn, and up until that time, my team thought it was about birthday parties and blowing up balloons. I mean, jokingly, but again, I don't necessarily understand it, where you're looking. And I know helium's, the commodity is a huge number, but I will say this, the best invention in the last 150 years to me has been the internal combustion engine, oil and gas. Now, all these other things, I can almost guarantee you that when Aldon is done, when oil and gas is done, I will no longer be in the energy business because I don't know where it's going. A few years ago, everything was electric cars. Before that, it was hydrogen cars. They're back doing this, doing that. Wind farms, solar. I don't know. And I'm supposed to be an energy guy. I mean, I've lived my life as an energy guy, but I'm really an oil guy. That's all I know. And Mondor rule number 7, when you don't know, don't do anything. And so we haven't made a move into those other areas.
That's Aldon, Tribune, thoughts on Saskatchewan, investing, movies, show pass, everything else. I think that's a great conversation. One formal conversation there, if that works for you.
That's wonderful. Thanks for having me.
Hello, listeners out there. Thanks for checking out the podcast. Hopefully the episode provided some insights. If you enjoyed the show, check out trose.ca where more episodes are yet to come. You can also subscribe to the podcast where your token of support is much appreciated. Until next time, happy coffee drinking.